All right, let's talk about the biggest puzzle on Wall Street right now, Nvidia. I mean, this company is literally building the future of AI. It's everywhere, and yet the stock's been getting hammered. So what gives? Is this just a little market panic, or is this a massive buying opportunity staring us right in the face? Let's dig in and figure it out. So here's the big question, right? AI is changing everything. It's the biggest tech revolution since the internet, and Nvidia is at the heart of it all. So why on earth is the stock down almost 19% from its peak? Seriously, what is going on? Is this just the market being shaky, or is there something more serious happening under the hood? Okay, first up, let's try to understand the panic. We're going to look at the warning signs. We need to decode what the market bears, the pessimists are seeing. We're not talking about the company's business for a second. This is purely about what the stock chart itself is telling us. And the story really starts right here. For the first time in over a year, Nvidia's stock broke through a really critical floor, a support line that's held strong for ages. You know, for technical traders, this is like a giant flashing red light. It's a signal that the incredible upward rocket ship we've been watching might be, well, losing fuel. So what is this magic line? It's the 200-day simple moving average, or SMA 200. Just think of it as the stock's long-term trend line. It's the average price over the last 200 days. As long as the stock stays above it, big investors feel pretty good. The trend is up. But when it falls below that line, like Nvidia just did, whoa, that's often seen as a major red flag, a real shift in momentum from positive to negative. And it's not just that one indicator. It's like the entire dashboard is lit up with warning lights. You can see the current prices below both the short-term and the long-term averages. And then you have other gauges, like the MACD, which basically screams, selling pressure is getting stronger. And look at the RSI, the Relative Strength Index. It's way down at 18.82. Just so you know, anything under 30 is considered oversold, which means there has been a ton of selling, really, really fast. And if that wasn't enough, to top it all off, the chart analysts are seeing something that gives them chills, a classic head and shoulders pattern. You don't need to know the specifics, just know this. It's a textbook sign that a stock might be heading for a bigger fall. It's the kind of thing that makes you think, okay, maybe the big players are cashing out after that huge run-up. Okay, so that's the scary part. That's the story the charts are telling. But, and this is a huge but, that's only half the picture. Now let's completely switch gears, forget the squiggly lines on the chart for a minute, and look at the actual business. Because while the stock looks weak, the company itself, it's an absolute fortress. We're diving into the fundamentals now. And just look at these numbers. They are absolutely insane. Let's just start with revenue. A 73% increase year over year. I mean, think about that. Most big companies would throw a party for 10% growth. 73% at Nvidia's size is just, it's almost hard to believe. And it gets even crazier. Their profits are growing even faster than sales. Net income, that's the money they actually keep, shot up by 94%. This isn't one of those grow-at-all-costs tech companies. This is a cash-printing machine. So let's break this down a little. The number you really need to look at is that data center revenue. That is the heart of Nvidia's business right now. It's almost all of their sales, and it grew by 75%. What this tells you is that the biggest companies in the world, we're talking Google, Amazon, Microsoft, they are just throwing money at Nvidia, buying up these AI chips as fast as they can possibly make them. And if you're wondering if this is going to slow down anytime soon, look at this, $1 trillion backlog. That's with a T. That's not a guess, it's not a forecast. That's the value of the actual orders they have in hand waiting to be delivered. It gives them this incredible, clear view into their future sales. It's a sign that this whole AI revolution is just getting started. So the business today is an absolute monster. But Nvidia is famous for never standing still. So now let's look to the future, because what they have coming next could change the game all over again. We're talking about their next generation of chips, called Vera Rubin. Okay, just take a look at these specs, because they're pretty mind-blowing. Blackwell, their current chip, is already the best in the world. But Vera Rubin? It's a whole different level. We're talking 5 times the performance for inference. That's the part where the AI actually gives you an answer. Imagine asking a question and getting a complex, thoughtful response instantly. But here's the real kicker, a 90% cost reduction. 90%! That means it's going to be so cheap to run AI that it'll be baked into literally everything. This isn't just an upgrade. It's a total game changer for the entire industry. And that massive cost reduction is all about hitting this one specific target, what they call the inference inflection point. The idea is simple. Right now, a lot of money is spent building and training AI models, but soon the real money will be in using them every single second of every day for billions of people. That's inference. And that's the market Nvidia is building Vera Rubin to completely own. And all of this power leads to the next big leap, Agentic AI. Now, this isn't just about asking an AI a question. This is about AI that can actually do things for you. It can reason, it can plan, it can carry out complicated tasks all on its own. It's like having a team of digital assistants or a digital workforce. And Nvidia wants to build the engine that powers this entire new economy. They think this is the next multi-trillion-dollar opportunity. So, okay, let's pull it all together. We've got this wild situation. On one hand, a really scary-looking stock chart. On the other, a company that is firing on all cylinders and literally inventing the future. So what do you do with that as an investor? Let's look at a possible game plan, a playbook for how to approach this. Now, based on market analysis, here are some key price levels people are watching. The zone between $150 and $165, some traders are looking at that as a potential aggressive buy zone. If you're more of a short-term trader, the area around $200 to $210 is seen as a place you might think about taking some profits. And this is the important one. If it drops below 143, that's seen as a critical stop-loss level. It's the point where you might say, okay, the bears are winning for now, time to step aside.
Of course, it's not all smooth sailing. You've got to be aware of the risks. First, there's always geopolitical stuff, especially with China. Second, their biggest customers, like Google and Meta, are trying to build their own AI chips. That's a huge threat. And finally, just common sense. They can't keep growing at 70+% forever. At some point, that growth has to slow down.
And that brings us all the way back to where we started. So, what is this? Is this dip just a temporary storm of little panic that will blow over? Or is this a rare, maybe even generational chance to buy into the company that's building our AI future while it's on sale? In the end, it really comes down to one thing. Do you believe the story the stock chart is telling you, or do you believe the story the business is telling you?